Don't blame me, man. Blame it on the double. What's going on, everybody? Stocks on the rocks. Here we go. You like that music, Rich?
Hey, good evening. Tell us a story.
What's up, Ian?
Not much.
All right, let's get the music out of here. Got some drinking music, right? All right. Let's see. Let's see. I think we have everybody who was in the waiting room in the room. Maybe we'll have some. Yeah, here we go. Got some more people coming. Warm for the last minute. Come on in. So let me get I realized that when I left the house a little bit ago, I shut down my Thinkorswim. So let me pull that back up while we say our hellos. It is Thursday. We do Stocks on the Rocks every other Thursday, which is basically an open Q&A, office hours, driven by your questions, comments, challenges, successes, whatever you guys want to talk about is what we're going to talk about. So let me get this rolling here. And then we'll do a little housekeeping. Hold on, did I just screw up my password? Nope, I got it right. So yeah, so a little housekeeping starting off right. It's Thursday night as we go into the weekend. We like doing these open office hours. We do like 8 trading rooms a week. And so, usually myself, Chuck, or Herman, or now you, Carl. I see you popping in, taking over some reins. That's pretty awesome. Got to probably talk
Oh
about that a
dear.
little bit.
You
Man,
noticed?
he just kind of threw you in there, didn't he?
Yeah, so I do have a question. I'll
Yeah,
just
man. What's up?
I typed it in, but yeah, what are some of the resources I could use to become a better online presenter that you like? Do you have any hints and tips?
So like when you mean like resources, what do you mean? Like how to get
Better
better
at
at
them?
doing it, or like
Yeah,
what? Like, oh, the
everything.
only way to get better at doing something is to do it.
Yes, I know
Um,
that. You
that
could
is
be the
it.
best drummer in your bedroom, right? But until you,
Exactly.
yeah,
Exactly. Like it's, I mean, I think that says, I think that's pretty much goes with everything in life. Um, my kids, for instance, are 16 and 18, and they've been playing live music in front of people since they were 7 years old. And so when my son goes out on tour, he just left. Well, he's not out right now, but he got on his first tour um, when he was 17. And he had the most stage presence out of everybody on that stage, almost, right? I mean, the drummer has a lot of stage presence, but he's 29, 30 years old. So he's had a lot of experience playing live. And the only way you're going to get that kind of experience as an entertainer is to get on stage and entertain. And to a certain degree, Carl, you're instructing, you're leading the session, you're kind of going through the markets and the charts and how you see it, answering questions as they come up. But you're going to get more comfortable on camera, you're going to get more comfortable with just answering questions, and you'll actually probably in my experience, you'll start to know, especially if you're speaking in front of different groups each time. Like I know you're in the trading room and it's the same people all the time. Um, but when I teach to new students, whether it's one-on-one or in group environments, or when I used to do like actual physical on-site presenting, um, I already know because I've done it so many times. I already know what questions are going to come up. It's always the same questions, for the most part, 95% of them anyway, and you just get used to dynamically just being on the fly, being okay. If you know the answer, obviously give it out. I think one of the biggest things that I would say um, is like if you don't know the answer to something, don't make it up. I feel like some people get in front of an audience and they have this need to impress and need to feel like they know everything, and there's a lot of it says a lot about a person who's the presenter if a question comes up and it's like, I don't know, that's a good question. I've never been asked that question before, and I've never been curious about that, but let's go find the answer together. I think, just having that candid, kind of behavior, and that candidness. I think that's important. But I think, in watching some of the stuff that you've done, and I haven't seen like a whole thing. I mean, I edit the beginning off and I make sure that I cut out any of the dead air so it goes right into, you know, um, Chuck or Herman or you or me. So don't have this 10 minutes of dead air. But yeah, I think that you just have to do it. And so the more you do it, the better you're going to get at it. You know what I mean? So.
Okay. So no
But
actual
but
classes.
but I would say even more specifically, if you have questions around, I run into this and I don't know how to do like what's the best way to like tackle something specific. Like if you have something specific you're trying to accomplish, um, I think that, probably help there as well. And what you're doing in the trading rooms is you're not, I mean, you're instructing and you're driving and you're leading and you're finding trades. And I think that's you're really good at that part. If you were talking about, okay, well, there's an event coming up that I'm doing online that's a little bit more enrollment or, dare I say, sales driven. That's a whole different presentation style where, it's a lot less teaching, it's a lot less facts and figures, and you got to do all that kind of stuff. It's a lot less about look at all the things that I know that I can teach you. There's a little bit of that, but good sales is good storytelling is really what that is. So if you want to be a presenter on that level, get really good at storytelling, right? And demonstrate through stories, real life experiences, things like that.
Okay, thank you.
I mean,
There is one thing that Ian and I had problems with, and that's sharing the music. For some reason, when I do the music, it's very low. I know
okay.
that's a Zoom
So
problem.
where are you playing music from?
Same thing here, and it's clearly a Zoom thing because I'm on a Mac and he's on a PC, so it's a Zoom thing, definitely a Zoom thing.
So when we
So
share the screen, there is
yeah,
a share computer audio, and we tick that.
okay, good.
But for some reason, the music that I play from a website, say Soma FM or something like that, is very low to the people listening.
So let me ask you this. When I was playing my music, I play it through Spotify. How's the volume?
Good. Your volume's always been good.
Okay. So there might be something with pulling audio from a website because I think what ends up happening if like I have control over the volume internally in Spotify and I usually keep it about 50%. You can see my Spotify here. I usually keep it about 50%. And I think that's a good balance for music that you guys hear. And then when I come on and say hello and welcome, it's like a good balance there. Um, but there might be something to your volume on your computer, like your internal volume, which my internal volume is pretty much all the way up,
Corey,
right? So I'll
I'm
check your
getting the
internal volume on
same.
your computer,
I'm
maybe.
getting the same the same sound problem if I'm playing something that's ripped and lives on the hard drive.
Well, that would be that then that would be your computer's native volume control. So I would ask, where's your volume on your computer, right?
Normal, no
What's
change,
what's normal? What's normal?
no change from where it is if I'm listening to you right now.
Yeah, so what's normal? Like where? Are you at 50%? Are you at 100%? Are you at 25%?
In my case, like 25%.
Yeah, try to go to 50 or higher. Now what you may run into is like the volume coming out of your speakers may be too loud. So I have a little bit of a unique setup because I run a recording studio here. And so I can turn my volume on my computer up, but I happen to have an extra one I can show you. I have this little guy right here, which is like 60 bucks, 70 bucks. It's called a big knob. And what it is it's a monitor controller. So what I have is I have my audio from my computer, just from my Mac Studio here, going into one of these, inputs. And then I have from my audio interface, I have a second set of inputs and I can source select so I can switch between the two of them. Like say I want to hear audio from my computer, or I want to hear it from my interface. And what's nice is I can have the volume on my computer internally all the way up, but then I can, if it's too loud coming out of my speakers, which it would be, this knob lets me turn the volume down so I can control my monitor level from this volume while having my internal volume on my computer all the way up. I think that's your issue, is your volume is really low. Like if I play this audio, and I'm at 25%. How's that sound to you guys?
Very low, yes.
And I think that's what you're running into. So if you turn your computer volume up, I think it's going to spit out a higher volume to the listener. But you got to not be afraid to go up 50% or higher on your computer's volume. But then again, if you don't have a monitor controller like this, like I do, it might just be blaring out in your studio or in your office a little bit too loud. So I have an external monitor control that lets me do that. Chuck does the same thing, except he has a little mixer. I have a mixer here as well, so I can control volume that comes through my studio monitors two different ways while keeping my computer's internal volume all the way up. And then I keep Spotify at 50%. So it's an internal computer volume thing. Turn that up, and I think you'll be able to. I think that'll solve your problems.
Yeah, I just gotta dig into some of the settings and with Zoom, seems like.
It's not even a Zoom thing. It's just like however you turn the volume up on your PC or
Yeah,
on your Mac.
the control panel. Some of them are grayed out. It's down at minimum volume and it's grayed out when I'm in Zoom.
Hmm.
So
Yeah, I mean, we could certainly take a look at that, offline. I can certainly take a look at that with you. Ian, you're on a Mac or your PC? I think you're a Mac, right?
I'm on a Mac,
You're on a Mac, yeah. So
and
you
I
know how to
can't
turn your
find
volume
anything buried in here that makes a difference.
on
I'm
volume.
on a PC,
Yeah,
like the old Mac PC ads.
Like I went into, yeah, exactly. I remember those.
exactly,
Actually,
exactly.
actually, actually, Chuck and I, we used to joke around because him and I have absolutely nothing in common. We could not be further apart from each other in terms of what we like in life, our personalities. I mean, everything we could not be further apart. I'm a music guy, not a sports guy. He's a sports guy, doesn't listen to music. He listens to talk radio. I mean, there's so many, we could go deep down a rabbit hole on how different we are. And Chuck and I used to always joke that he's the PC and I'm the Mac. That was our joke. But Ian, in your system settings, go to sound, and this will allow you to move your volume up and down. And if it's down here at 25%, you're not giving it
It
enough
doesn't
juice.
make any difference. It sounds like it's being played from an FM radio behind the computer.
Well, we can troubleshoot offline. I'm happy to do that with you guys if you want to mess around. Um,
At least the mic sounds good for both of us. We
Good.
can tag team sharing screens easily. The
Great.
mornings have actually been really good. It's forced us to get up and get our act together and have coffee. And it may sound boring to be, my chart's going to look like Carl's 9 times
That's
out
all
of
right.
10.
That's okay. So either you both know what you're doing or you both suck at this.
Exactly. Exactly.
Exactly. Yes.
Yeah, the answer to that is yes.
I would say the first is more likely than the latter. So keep it up. Keep it up. But yeah, let me know. We can hop offline at some point, get on Zoom, just the three of us, and we can troubleshoot and I can
That
tell
is
you here on
exactly
my
what I
side.
was just going to ask. At some point
Yeah,
tomorrow, next week, whatever.
yeah, absolutely. Yeah, I tomorrow's fairly full. I've got a pretty full day of mentoring and teaching tomorrow outside of trade management, but yeah, next week let's do it. Just I'll let you know what times are available and we can hop on and I mean we could even justify maybe spending 10 minutes after the session tonight when everybody hops off and just take a quick peek anyway. So we'll see.
I'm good with
Tex has the
everything. I'm
volume
good with
control on his
whatever
keyboard.
works.
With Tex, you have a volume control on your keyboard that works perfectly. Yeah, same here. Same here. So yeah, we'll take a look. All right, trading questions. Here we go. Joe Barrett, what's up, buddy? Good to see you. Corey, does the six candle rule apply to all time zones? For example, a 15-minute zone has six or more candles, does invalidate a 30 or 60-minute zone? So the six, it's a great question. So the six candle rule, which if you're not familiar with what a six candle rule is, it's basically a rule that and really kind of Chuck came up with it. And I'm like, yeah, I like that. I'm going to go with that too. Um, and that's if things aren't, progressing, but basically, what he came up with is a six candle rule, which applies only to your trading time frame, right? So most, if not all of us, use multiple time frames for multiple purposes. Like for me personally, I use the daily chart as my trading time frame as a swing trader. I use the weekly time to gauge trend and overall context, like where are we in terms of big picture supply demand, and then just gauge overall trend. And then I will build the trade off of the daily chart, meaning I'll look at my entry zones and my targets and where my stop is probably going to go. And then I'll go down to an hourly chart to just refine that stop loss and maybe an entry if I need to refine something down there. But my trading time frame is the daily. So basically what it means is if I enter something on the daily time frame, let's for instance say this, well, it didn't, this is a bull put spread, so that's probably not a good example. But let's say Nike. Nike, a couple weeks ago, I had picked up a bull call spread off of a decline back into this little gap up base and then another, breakout move up here. So I picked up a bull call spread here with a target of 79.15 off the daily charts. And the six candle rule would basically say, if I buy this, and let's say I bought it on this candle, 714, if six candles go by and it's not moving in my direction, then that would be a cause for A, get out. It's not working. It's not moving because if all the demand were there, then price should have, that I think is there, then price should have started to move away already. Um, I don't have to get out. I can give it time. If it's a credit spread, I don't care about the six candle rule because I make money even if the stock is not going anywhere. It's really particularly designed for stock trades that if the stock is just kind of parking itself in this area and the demand is not there, the theory is if the demand is not there, it opens the door for more sellers to come in and push prices lower. Then you end up with a drop-based drop. So if the stock's not moving after 6 days, move the stop up a little bit, maybe get a little closer to break even, close the trade. That's a big consideration. It's more designed for somebody who's in an option trade that's experiencing some negative theta, some time decay that's working against them. 6 days in the trade, still true. Supply could come in and push prices lower. So instead of taking a full stop out, you can move the stop up a little bit, or close the trade wherever it's at. But it's off the trading time frame. So if your trading time frame, Joe, is a 15-minute chart, then it's six candles on a 15-minute chart, right? You're not going down to a 5-minute chart and saying, oh, I'm trading off the 15. Let me go to a 5 and pick five, six 5-minute candles. No, it's off your 15-minute chart. So that's kind of the big deal there. And there's nothing, that says like if it's been six candles and nothing's happening, then you always have to do this. It's really just a consideration point. It's an evaluation point. Do I want to give it a little bit more time? If you want to, give it a little bit more time. If it's burning too much theta or your risk reward is starting to suffer because it's burning too much theta, then that would be a stronger consideration to say, yeah, it's not working, just get the heck out. Not take full stop, things like that. But it's off the trading time frame. So whatever your trading time frame is, apply it to that. Does that make sense, Joe? Sweet. Um, Hey Corey, what's up? This is the next question. What's up, Raphael? Good to see you here. So asks, hey Corey, what's up? Is there any big news today that made the index drop? Are you talking about, so if I go to the S&P futures or we go to SPY, we can see just all day. We had a gap up in the indexes and then prices fell off. That's what you're asking about, right? Gapped up, sold off. So I don't generally dig into a whole lot of news, but I do remember seeing something. I know that tech was rallying today, simply because we've got new tariffs kicking in, but but I think Trump loosened the reins a little bit or made special accommodations for tech companies who are bringing manufacturing back into the US. And it's one of the big reasons why Apple actually rallied as much as it did. But tech was up because of that. Um, but as far as other news, I don't think there was anything major out of the economic. I don't think we have any economic stimulants, this week. I mean, initial claims, I think maybe this was one, the initial, like, if you look into last week, I'm going to go to Forex Factory for a second. FinViz is great if you just want to look at this week. Forex Factory Economic Calendar lets you go back a week, forward a week, things like that. So if you go into last week and we look at things like all the jobs data, right? So JOLTS, worse than expected. ADP, non-farm employment change, actually that came in a little better than expected. We had hourly earnings. I think that came in pretty much in line. Non-farm employment change, worse than expected. Employment rate came in line. I think there was a little bit of anxiety in the market last week about the healthiness of the job market. And then you come in today and you get a little extra confirmation from initial and continuing claims, and they came in a little bit, underwhelming, let's just say. So I think there's a little bit of anxiety around the job market. Maybe I think that might have been why the rest of the market might have been falling. I don't think it was anything driven by earnings, but little tariffs, like news coming out on tariffs, is always going to be probably in focus now because I'd say 95% of the way through what, most earnings that are going to move markets. Um, but other than that, I don't think there was anything major, at least knowable. Of course, there's always unknowable stuff. There's always stuff that we just don't get, information about, in terms of, we're not the first to know. But I think for the most part, I think it was mostly that. Um, Also, given the fact that if you look at, let's pull up SPY here. And let's go into a smaller time frame. I mean, if you look at, actually, I'm going to use ES for this, and then we'll come back to the SPY. Okay. If you look at daily chart, come on, there we are. If you look at the overall trend of the market, it's still technically up, but if you look at the momentum, like we had, higher highs, higher highs, higher highs, higher highs, kind of put a question mark at the end of that. Yes, we did. And then equal highs, right? So the momentum in the market to the upside is definitely slowing. And we had a bigger pullback recently, we'll call it last week, than we've seen pretty much in this entire move up, except for maybe here. And then right after this huge one-day move. So I think what's happening also is, we've got these major market concerns that are just is like the healthiness of the uptrend. It's gone. We're not in a downtrend, but the uptrend is definitely in trouble. And if you go down to an hourly chart, I have this area from my trading room this morning, actually, that shows outside of any other news, doesn't matter what the news is, we had a drop in price, which basically was almost a double top. So barely made a new high, drop in price, a little bit of sideways basing here, and then the real drop, which actually took out all of this support to the left over here. And so we have another supply area here that took out all this support to the left. And so what you'll notice is that when price returned to that supply, it did react, right? And then when it returned and based again and rallied straight up into this secondary supply, which is right near the all-time high, that alone, is enough to start triggering sell orders, pushing market prices down. So it may not be news related at all, even though there was some negative news around initial claims. And then, of course, new tariffs kicking in, things like that. Just strict supply demand and analysis of the chart would tell you that if the market's going to turn lower, this is the price it's likely to do it at, just like it did back here until this becomes, an invalidated supply level. And so I think the answer is price ran into supply and dropped off. And if you're looking for news to support that price action, you can say, oh, tariffs. You could say initial claims, healthiness of the job market, all that kind of stuff. Right. But always look into what's really going on in price action because the news just kind of makes up, oftentimes news here's what I'll say. News will drive prices to where they were going to go anyway, right? So it'll just accelerate the move. So once prices started to turn in this area, it wasn't a huge acceleration to the downside, but then right around 10 a.m. Eastern, this big drop off happened. It's not by coincidence that we had economic reports come out around that time. Mind you, not very, impactful ones. So wholesale inventories, that's a light impact at all. But yeah, I didn't really see anything news-wise. Could be profit taking. It could be just that price ran into supply, and anybody who was looking to sell in this area that couldn't sell here started selling again, and that just accelerated it. But it's responding really well. The overall market is responding well to its supply and demand levels. I mean, here we had a nice drop-based rally breakout move, and the market held that perfectly too. So it's not enough to really this whole move today is not really enough to spook me into, oh my gosh, the whole market's falling apart. Do I have some negative delta positions on? Yeah. Do I have a hedge in the VIX on a call spread? Yeah. Why? Because big picture, I am concerned that the momentum to the upside is gone, and we're just going to range around this area and possibly drop, especially if any more negative news comes out. Um, but I think, I mean, if tariff news is out and the market hasn't really sold off in a dramatic way, I think we've kind of settled into that idea. Economic reports are really the only thing that are going to drive it at this point because earnings is gone. I don't think we have another Fed interest rate decision until September, so that's not really going to drive much of anything. So I'd pay a little closer to price action than I would news. That makes sense, Raphael? Gold went into all-time highs a couple hours ago. Nice. Didn't hang on to it though, did it? So, but I do like the fact that it did break above it. It would be nice to see tomorrow if we can actually get a sustainable move above here, because if we do, then this becomes a fantastic little demand area right here. That was the origin of the breakout in the new highs, right? So this will become our little flip zone right in here. In fact, I'm going to keep those old lines on, and I'm going to draw my highlighted box around this little base rally demand zone here. But I need this to be a little bit, I need this to be a sustainable, give me something that's not just a fake out. Give me a real breakout. Do you know what I mean? I don't think the dollar did anything. I mean, not really today, did it? No. Dollar starting to get into a little bit of an uptrend, could point also to a little bit of a US stock market trying to get into a neutral to at least, possible downtrend. Because the whole time the dollar's been going down, it's usually an inverse correlation to stocks. That's why, we would consider long stocks to be a natural hedge against the dollar declining, and vice versa, right? Dollar rallying means that stocks are potentially going to, at least go sideways or maybe lower. Joe asks, Corey, how much consideration will you give a double wick formation of equal length, even though it's counter trend? Tell me, what chart did you see that on that I can go back to for clarification? Was that the ES? Was that the SPY? Was that gold? Was there something on a, is there a particular chart, or was it you just asking in general? Asking in general. So are you referring to like a wick over wick pattern? Is that what you're asking? Like something that's, as an example, this wick is poking up on that candle, this wick is poking down on that candle, and they're about equal length. Is that what you're talking about? How much weight would I give that supply in a wick over wick format? Just looking at the chat box to see if that's what you're talking about. I don't want to go down a rabbit hole on something that you're not even talking about. Nope, that's not it. All right. Can you give me an example? Or double tops, right? Double top like this, kind of. If this is what you're talking about, then this is or something similar. I
Can
still
you hear
give it
me?
plenty. I'm sorry.
Can you hear me?
Oh yeah, definitely. Yeah, this is
Okay,
nice.
so yeah, so as it relates to the double top wick, so for the example that you have up there right now, let's just say, for example, hypothetically, there was that I'm looking at that red candle. There was two candles there, and both wicks were about the same size. So I'm speaking specifically to the wicks. Are you, is that like is that are you, typically that means that's a very either bearish or bullish signal, depending on how the wicks and the formation sets up. My question to you is, how do you evaluate that? Are you still looking at that as a strong signal, even though it's counter trend?
Yes, I do
Okay.
consider that to be a strong signal of certainly weakness in this particular market. It doesn't mean that the market's going to fall apart, but it does give me an indication that the uptrend is in trouble. So how do I trade that? Well, I don't just short near an all-time high because we had a double top, especially if we didn't take out these controlling lows. So we have some lows over here. We still have some support. The market didn't take that support out. So I'm not just shorting the minute it gets up there. If I'm going to short something near all-time high because we had a double top and MACD says slowing momentum, then I'm not afraid to short, but I need confirmation that that level is starting to actually hold, right? I don't just short the moment it gets there. It's not like limit entry short, but I will definitely consider that as a warning sign. Shot across the bow. We had a little decline here,
Now,
an attempt at a rally back up. It couldn't really hold on to it, and then we had a bigger decline. And so I definitely look at that as this uptrend is in trouble. Um, and I'm going to be very mindful. In fact, if for those who've been participating in our trading rooms, I've got some bullish directional trades on, and they're from a few weeks ago, month ago, which was kind of back in this area. The market was pretty bullish, and then it just sort of fizzled out. And I would say all but maybe two. I don't have a huge handful. I probably have, five or six directional bullish trades on that need the market to move up. And a couple of them are still doing okay. They're still hanging on, but most of them have just sort of petered out and they're not performing. So what does that do? That makes me steer away from new trades that have a strong directional bias to the upside because I don't see that strong directional momentum in the overall market. A lot of stocks are not going to buck that and they're not going to go against that. They're going to generally do what the market does. So I don't necessarily look to short the S&P because I got a double top, but I am very cautious now about how directional I am on my other bullish positions that I'm setting up for the future until we take this out in a meaningful way. Does that make sense?
yeah, so as far as confirmation is concerned, what are you looking for in terms of confirmation?
So while I don't trade futures anymore, if I were trading futures, I would look for if this is the level, very strong level. I actually love this level a lot because it is what actually really love this one, almost even more, but just as much because anytime we achieve a quick all-time high on slowing momentum and then we get a little drop, little bit of basing followed by a strong drop, especially if it's a breakout move, we just happen to have a couple of them above current price, then this is an indication where I would say, okay, counter trend, I get it. It's a little aggressive because I'm going counter trend in the whole market. Confirmation looks like this. I need price to come up in the zone. Ideally, it comes in the zone by around 50%, kind of penetrates it by around half. and then starts to come back out and gives me a candle formation that is a bearish candle formation coming out of that supply. That to me is enough confirmation to say, okay, it's reacting as I expected it to. Now I can start to take a look at maybe entering into some sort of, negative delta position, whether that's short the futures, long the puts, short call spread, long a debit spread, just short the stock outright, whatever it happens to be. So I look for price to react and start coming back down. That to me is enough confirmation. Additional confirmation would be wait for that candle to close. And then the next candle, if we get a lower high and a lower low, that's full on confirmation. But if you wait for that, and it's not wrong, that's true confirmation is you need 3 candles. True confirmation is 3 candles. A leg in, a bearish style candle with a higher high and a higher low. And then the third candle is lower high, lower low, confirmation entry. Now, downside of that is if your stop is still above 64.34, this is going to increase your risk because you're getting it a little bit late. But if you're waiting for a little confirmation, you're always going to be a little bit late, right? But you're going to feel a little bit safer about it at the same time. So in other words, it's difficult when you're waiting for confirmation to have low risk and high probability. He's like, you got to choose one. You can't have both, right? Low risk would be enter the moment price gets into the zone. That's low risk. But if you're going counter trend, that's lower probability. If you wait for confirmation, you've got higher probability because price is proven to react, but you have high risk. So you have to choose the lesser of two evils there. And if you wait and let's say that this red candle that I'm hovering over right now, let's say you woke up and you open your computer and the candle looked like this first thing in the morning. You're like, well, I missed my ideal entry because your ideal entry is as it broke yesterday's low or the last candle's low. On an hourly chart, that will be the last hour's low. So as soon as it breaks that low with a lower high, that's enough for me to say, great, short entry, engage, go, right? But if you wait too long, and you're like, wow, that's a big red candle. I missed my entry, trade's gone. Good old fancy technical analysis. That's right, Ian. That's out of the technical analysis book, confirmation entry. Now you could also get even more micro about it and say, well, if I get into this area and I start to see a little hammer, like a shooting star forming, which is a long upper wick, um, and then the next candle is like starts to become a little bit red. You could be a little bit more aggressive. It's a little bit more aggressive, but at least you're getting some confirmation that price is reacting in here. So there's a couple different ways to look at confirmation, but basically I want to see, is the level holding? Is price reacting the way that it should react in supply? Is price reacting the way it should react in demand? Look at this. Came in, long lower wick, very bullish hammer candle, and we got confirmation the next hour, and price is off. It's probably going to reach this area, and we'll see what it happens when it reaches this area. My guess is you're probably going to get a little reaction there, but depends on when it hits, overnight versus during the market. Does that help, Joe? Counter trend is always a little bit more aggressive. So you have to know that, there might be a $5 bill floating around out in the middle of the freeway and cars are zooming by. It's just like, how badly do you want that $5 bill? That's a $100 bill. How bad do you want that $100 bill? It's in the middle of the freeway. Cars are just zooming by. You're like, I'm not going to risk my life for that $100 bill. But if there's a break in traffic, or even better, there's an accident. I mean, better. There's an accident that causes traffic to stop. And you're like, wow, there's no more cars. Now I can go safely grab that $100 bill, right? You always want to wait for a little slow in traffic or a little break before you run out into the middle of the road and grab that bill. And that's what confirmation entry is. Do you know what I mean? If there were no traffic coming, I'd say, and you saw $100 bill in the middle of the road, I'd run right out and grab it right away. Wouldn't even think about it.
Yeah, so does a double wick, I guess, generally speaking, or oftentimes represent a pivot point?
Oftentimes, yes.
Okay.
Yeah, and they don't have to be um like let me get my drawing tool here. They don't have to be like perfect. Like this high was not the exact same as this high. Just like this low was not the exact same as this low. But think about it. If you get a drop, a rally correction, a drop, a rally correction, a drop, a rally correction, a drop, but it didn't drop by the equal amount as it has been. What does that indicate about momentum to the downside if price just stops maybe right at the prior low, maybe a little bit lower, and then rallies? What does that indicate about momentum? Yeah, the momentum, which has been down, is slowing. And so that will be an indication to say, okay, cool. It looks like momentum is slowing. If we can break above this high, especially, it looks like the trend is going to try to start reversing, right? Because a market's generally not going to do this. I mean, it did that on tariff talks, but news had to come out to create that V bottom. And you're going to get more V bottoms, something that looks like that. Big drop, big drop, big drop, and boom, shoot straight up. You're going to get a V bottom. You're rarely going to get a V top. Rarely. Almost never does a V top happen. And that's not even a V. That's a what? That's a TP? TP top, V bottom? I mean, TP top is not an official term. I just kind of made that up. But yeah, markets tend to slow on the upside and then kind of roll over. If you've got a situation like 2008 when the market collapsed and fell right into monthly demand, yeah, V bottoms tend to happen. A V bottom happened back in April. News driven move down, quick rebound, right up to new highs. But you see how we didn't V top, we kind of M topped. You know what I mean? M top, V bottom. So you can recognize slowing momentum on the upside takes a little long, you get a lot more evidence of slowing momentum on the upside. Um, in a severe drop that's going to V bottom because it hits some monthly demand, usually don't get a lot of confirmation. It's just usually boom, boom, right back up. So you go back down to the daily chart around that time, and you can see that we spiked here. Did not what wasn't like a big breakout move up, but a second attempt at that level, and prices were not able to go lower. This is good confirmation right here. All that helpful? All that makes sense?
Yeah. So one other question for you, Corey.
Yeah, man.
With that ES chart that we were just looking at, where that let's just say you were to get into that supply zone, I think it was 64.21. I'm not sure what the price point was. Would you would you look to as a target demand area? Would you look to get for 63? What's that? 63.39? Would that be? Would you? I don't know. I'm not sure if the term is instinctively, but would you look to say that's what I suspect the price to go to as far as the demand zone, and then place like a trailing stop on that short trade?
I would not have anticipated, it's a great question. I would not have anticipated this area being my first target.
Okay.
Reason being is because we want to watch how price arrives into this supply area.
Okay.
So how did
Okay.
price arrive, right? We moved up, we based in this area of resistance right here. We based a little bit more, and then we had a breakout rally. So I would have assumed that price reacts to this supply. It's probably going to get down to this area here, and it's going to find some support, most likely. Unless it's news driven, it's probably going to try to find some support in this area because this is a newly created demand that was a good amount of basing at an old resistance, going back to, dear old, technical analysis where old resistance oftentimes acts as new support. We got this whole area here where this is like a really great fair value area, almost loosely drawn, where here, in the past, prices were very supportive. Price based, they drop down. And now when we're under this area of fair value, price will come up typically and use it as resistance, as it did, and pull back down. When we hit that resistance enough times and we base in that area and we break above it, oftentimes that old area of fair value for sellers, pushing prices down becomes a new area of fair value for buyers, keeping prices up. So I would not have anticipated 63.39 as my first target. A second target, sure, but not first. Does that make sense? Why?
Yeah, I totally understand.
And by the way, which also I would add to it, if this big move right here was not boom, 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 three big green candles, if all this basing happened right here, it would completely disqualify the short altogether, because now there's no reward potential relative to the risk. So any basing in front of a level that you're thinking
Right.
about going short or long, it immediately disqualifies, because you've now created a new demand or supply level right in front of another supply demand level, so your profit margins are gone. Make sense?
Yes.
But now this is completely irrelevant, because it was taken out by whatever news helped drive prices down here. So none of this even matters anymore. Now it's just about this new fresh supply, this not so fresh supply, this not so fresh demand. We do have fresh demand down here still, and then we have fresh supply up top. So I'm looking at these areas as probably, if I'm trading off an hourly chart, very choice areas of supply. Um, a pretty choice area of demand. I'm doing dollar signs here, like expensive versus not expensive. You know what I mean? Like expensive restaurants versus not expensive. These are more expensive because they're fresh, and these are more expensive because they're fresh, right? So the tastier they are, the more expensive they are. So because this is not fresh, it's a little less tasty. Because this is fresh, it's tasty. Because this is no longer fresh, it's a little less tasty. Helpful?
Yes. Thank you so
Awesome.
much.
Love it. Yeah, man, my pleasure. My pleasure. Really choice, right, Ian? Really choice. Great line from Cheech and Chong. Choice. Yeah, man. All right. Raphael asks, let's say you traded a supply zone, supple supply zone in an NQ, and it went down 25 points from your entry, and then you closed the position for profit, and then after that, the price rallied through the zone. Now, would you consider that an invalid zone when you traded it, or were you just lucky on that trade? All right, now that I read the whole thing, let me read it back quietly. I'm a terrible reader, by the way. I never remember anything that I read right after I read it, which is why I don't do books. I could spend a week reading the same 5 pages. My mind is a little bit ADD that way. All right, so hold on one second. Let's see, supply zone down 25 points from your entry. So you traded the supply zone, it went down 25 points, you exited, and after that price rallied through the zone. Would you now consider the zone a valid zone when you traded it? Okay, so let me just verify that I understand what you're talking about. So let's pretend that I know what I'm doing with Zoom for a second. Okay, hold on a second. Let me delete that. Let's say that you traded just while we're on the ES for a second, let's assume this is the NQ. You traded this, and then it dropped 25 points, let's just say, from your entry, and then you closed the position for profit. Great. And then after that, the price rallied through the zone. Would you now consider that zone a valid zone when you traded it? What do you mean, like this zone a valid zone? Like your entry zone? I'm not following. Absolutely. I mean, especially if you look back and it was fresh and you traded the first retest back to a fresh, high quality, big breakout move with a lot of supply, a lot of evidence there, and you were short from here right back down 25 points to opposing demand or just in front of it. That's not luck, bro. That's skill. That's skill. Yeah. Because you're like, oh, like it's a valid zone at this point. That's a very valid zone, right? Price comes down. Now, if it retests it again, it's less valid because it's less fresh, right? Think about it. You have fresh sushi over here, a fresh sushi roll, right? Fresh sushi roll right here. It's fresh. Look at that. That's delicious, right? Price comes back up. Yeah, it's fresh, right? That's good. I want that fresh roll. Good. When price moves away, you just now had a fly land on that piece of sushi. Now, granted, it didn't stay on that piece of sushi, but it's not fresh anymore. Would you still eat that piece of sushi? If it was available, maybe. If it's the last piece of sushi, maybe. If there's like 7 other pieces there, I promise you, you're picking that sushi with the fly landed on it. I guarantee you're picking that one last. So, the fresher it is, the more quality that supply zone is, meaning we had very minimal basing, strong breakout, very big move, the more valid that is, right? The more valid that is. Second and third and fourth retests become less valid, less valid, less valid, less valid. Is that what you were asking? Does that make sense? Where was the fly before the sushi? I think you know the answer to that, Carl. I think you know the answer to that. Which is pretty gross. But I mean, if he just landed on it and flew right away, it's just like, how contaminated is it? There's already a bunch of parasites in that sushi. What's a little more? And I love sushi.
From now on, I'm calling unfresh zones contaminated. I love it. I'm stealing that. I'm going to use it tomorrow morning.
It's been contaminated.
It's been contaminated.
It's true. It's been contaminated. All right. And by the way, that's not my I stole that from Taylor Frame, actually. You guys know Taylor. If you've he doesn't do a lot of our trading rooms. He did a bunch of our trading rooms a long time ago. He still does some stuff with us over at Surge, but I think he filled in for Herman a couple weeks ago, maybe a couple months ago now, maybe last month or something like that. But Taylor Frame, yeah, he uses the fly on sushi analogy to talk about how fresh it is,
Corey,
right?
I'm going to burst your bubble badly. Jesse Livermore used the fly landing on the soup.
Oh, good. Then even better. So we're just
over 100 years old.
Yeah, we're just ripping it off,
yeah,
right?
There's nothing. There's nothing new in the world.
Yeah, there's nothing new in the world. There's
which
no
I
new
think is not even the biggest joke of all with what we're doing. We're reinventing the wheel. The men of elder days, they understand completely what we're doing and would have, they figured out themselves, and if they had this technology 100 years ago.
Sure. Yeah. There's nothing new anymore.
No.
Nobody's writing any new songs. I mean, just look at the movie industry. Nobody's making any new movies.
Yes.
Right?
Everything old is new again.
Everything old is new again. Just put some new actors in it and update the CGI and it'll sell. Reboots, that's right. And how fresh or not fresh or how contaminated or not contaminated it is depends upon how deep that zone was pierced, right? If it touched and went away, not that contaminated. If it went quarter of the way in, a little more. If it went 50% of the way in, a little more. If it went all the way in, fully contaminated, I'm not touching that on a retest, right? So how much got through your suit, right? How long did the fly stay there? So, Howard Wolowitz, gas station sushi. You know what? I've never had gas station sushi, but I was driving cross country when I moved from Florida to California for the second time. And I'm like, I'm really craving sushi. And we were in New Mexico. It was fine. It was probably not the best decision in hindsight, but it was fine. I think they used Tapatio to season their spicy tuna roll, but whatever. Whatever gets the job done. It was still fine. A little dangerous. I was living on the edge, gotta admit. Pretty far away from any ocean, but yeah, it's cool. All right, what else? Did I miss any questions? It's amazing how fast an hour goes. Good stuff in here, though. Great questions, guys. Great questions.
So Corey, another question for you.
Yeah, man.
This kind of relates. This is part psychological and part rules-based trading. If you find that you're missing trades because your zones are either too finite or too specific, let's just say you're doing a lot of confirmation entry zoning, right? And you're missing it by just a few clicks, which can be tremendously frustrating. Do you adjust to widen those zones, or will you know what, I'm sticking to my rules no matter what? Hopefully that
I,
you can understand you
I
understand the
do.
question.
I 100% understand the question. And I would always start with, especially if you're trying to like get the best risk relative to reward, get your risk tolerance into a like something that really fits your trade plan. Like if I'm trying to do that, then I'm refining this particular zone, right? More specifically, you can tell I kind of loosely drew it, but I'm gonna refine it to like here, right? Now, if I scoot over to the left, I would have missed my entry by a couple ticks, right? And that's what you're talking about. It's like I'm missing the entry, and then it goes my direction without me. Um, I if it's just a one-off scenario, like every now and then that happens, whatever, it happens. Sometimes prices don't get to your target, sometimes prices don't get to your entry, they just barely miss it and then move away. I wouldn't chase it, number one. That's the first thing. I wouldn't chase it. But if that's happening frequently, you're being too cute, right? You're trying to take the least amount of risk. And what would you say about drivers on the road that are the most defensive drivers? What would you say most would often happen? They're trying to avoid trouble on the road, but the most defensive drivers end up causing the most accidents. Would you agree with that?
No, the most defensive drivers don't get in a car.
Yeah, let's say
But
they
I
did get.
understand your point.
Yeah, I mean,
Most defensive driver is not going to pull the trigger.
right. Well, okay, so let's go with the second most defensive. Smart ass. But yeah,
Yeah,
like
you're right. Pass by,
yeah,
rear
they're driving all
ended,
slow.
ready
Everybody's
to pull
behind
out of the
them.
parking
They're like
spot,
they're
on and
afraid to
on and
do
on.
anything. They're going to cause an accident by being so defensive, right? So in trading, if you're trying to be that defensive, you're just going to end up not doing anything. So if that's what's happening and it's happening frequently, then you do have to widen your entry zone. You do have to buffer your entry, and you can buffer your entry by just saying, okay, instead of going, for instance, from bottom of the lower, bottom of the body, top of the wick, you just start saying, well, I'm going to go wick to wick now, right? And then wick to wick expands the risk a little bit more, right? So you gotta maybe take a little bit of a lower position size, but that'll get you an entry. And if even that's not enough, um, then you do have to, sometimes you have to, consider, am I even choosing the right zone? Like, I would not say this is a great example of, this candle I'm hovering over right now. That's not a basing candle, but if you had like a series of basing candles like this, and I mean, let's say you want to say, well, I need to widen my zone a little bit more. Let's just take the whole thing. Let's just take the whole thing, and then I'm more certainly going to get in, but I'm taking larger risk, which means my risk reward is going to suffer. So you got to think about those things too. But yeah, if it's happening infrequently and call it every now and then, don't change your process. But if it's happening more frequently, change how you refine your zones, make them a little bit wider, and just buffer your entry and try to get in a little bit sooner. Because once the competition really begins, right? And if the if a majority of the competition is going to be in, inside of this entire candle, which you don't know until it happens. I mean, who knows where the competition is between buyers and sellers? I mean, who knows where the ding 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 the bell rings and it's just like fighters fight. You know what I mean? It's like if fighters start fighting at 64.2350 and you got your order up here at 64.27 and a quarter, you're probably not going to get filled, right? So if you want to get in before the fight really starts between willing buyers and willing sellers, you're going to have to buffer your entry and get in front of them. Get in front of them, get in the fight early so that you avoid all this major conflict up here, right? I feel like I've said, does that make sense a lot in this session, but I'm always looking for confirmation. Does that make sense? Always want to know. Cool. Awesome. 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 Well, I think I got to all your questions. So happy we get to do this every couple of weeks. You guys always come with really great stuff. So, being that it's the top of the hour, it's 9 o'clock on the East Coast. Let's respect that time and get you guys to bed. I mean, if you're going to bed at 9 o'clock, it's only 6 o'clock. I still got to figure out dinner over here. But yeah, man, these things go by quickly and you guys have great questions. So I appreciate you bringing all that. I'm going to post the recording.
Thank you for a good evening.
Yeah, thank you guys. Appreciate you showing up and hanging out. So I'm not talking to myself. Always good to hang out more casually versus just kind of like plowing through trades. But let's see. We have another trading room tomorrow. Those of you who are in the options trading room with me, I'll see you guys on Monday. If you are not a pro member, shameless plug coming. Here we go. We don't have any major promotion going on now. You just missed that. But you can use the promo code Trader60 at checkout, and that will get you 60% off your first month at TradersArmy. Right? Normally $149 a month. Hopefully the people here who are in with us now feel like, and I'll let them comment. I won't speak for them. Hopefully you guys feel like that's a pretty valuable thing to have as part of your trading education and trading community, and hopefully it's paying for itself 10 times or more over. But Trader60 will get you 60% off your first month at TradersArmy as a pro member, which gets you access to over 50 hours of on-demand content, 8 live trading rooms per week, a whole series of trade checklists and all kinds of stuff that you can download and keep for yourself. And trade ideas and the Wealth Essentials model portfolio, all the whole 9 yards, man. We do a lot for less than $5 a day, even at the normal rate of $149 a month. So we do a whole lot. We try to keep it cheap, try to keep it so that you don't, it's not a hard decision to make. And so if you've been enjoying these, every other Thursday, come join us every day. I think you'll enjoy that a lot more. So, but that's my shameless plug of the night. What else? I guess that's it. Have a great night. Ian, Carl, do you guys want to hang out for a second? We could troubleshoot for maybe 5 or 10 minutes, your audio.
Yeah, that sounds good.
Cool. Yeah. Awesome. I'm going to stop the recording. Everybody else
Okay.
is free to go. We're just going to troubleshoot some audio stuff and for future trading rooms. But appreciate you guys hanging out. Talk to you guys later. Have a great weekend.